now to put the spotlight on Teamlease. We have Ramani Dathi, the Chief Financial Officer, joining us on the show to talk to us about their earnings. Ramani, hi, good to be speaking with you. Well, overall, it was fairly a muted quarter, one has to say. Even though the growth has been okay, there was a bit of a miss on the margin front. But we'll discuss all of that in due course. Let me begin by asking you about IT staffing and EdTech hiring specifically, because they continue to be under pressure. Are there any shoots either in EdTech or IT at least at the moment?
Yeah. No, let me start with IT staffing because as of now, we have seen that whatever the headcount drop that happened over the last 5-6 quarters, that has come down now. So both in terms of revenue and headcount profitability, it has been stabilized. So whenever the green shoots happen, be it in Q2 or Q3, so they can directly contribute to our bottom line. But honestly, if you ask me, is it going to happen in Q2 or Q3, Q4? Right now, we don't have any visibility. So it's good that we are seeing positive momentum and good hiring positions from GCC clients on IT side of it. But the volume drivers, which are mainly the IT service companies, have to pick up on the hiring aspect. Till then, on a double-digit growth within IT and specialized staffing, it is actually quite challenging without IT services contribution.
Also talk to us about how the margins fared this quarter, and the street believes, look at that, the trend is just coming up on your screen right now. They have been under pressure sequentially too, and trending, they peaked out around 1.5% and then coming down. I want to understand what's the outlook on margins, because certain section of the street believes that taking margins higher back could be challenging. What are the efforts you're making in that direction?
Specific to margins, we have called it earlier because mainly there is a NEEM withdrawal scheme that has impacted our staffing vertical almost to the tune of 20 crore in profit with the NEEM headcount, and not expecting any further impact coming on account of that scheme.
Just hold that thought. I think we have got you on a very scratchy line. We'll try and reconnect with you. But in the meantime, taking a stock of what's happening right now in the markets, and the numbers just came by for Clean Science, and that's the stock that I was looking at. So it looks like a decent set of numbers, at least for now. Margins have come in at 45% versus 41%. And of course, a lot of other earnings lined up today. You have ITC, you have Tata Motors, Auto Sales, Zomato. The list is really endless.
Well, it's the middle of the earnings season. Enjoy it till it lasts, because 60% of the revenue, the volume of the market actually happens in the earnings season, these 1.5 months. But I want to go back on Teamlease for a second, sure. Anisha, because what I was thinking was that could it be a situation that Q1, which actually saw a hit of the large volume driver, which is IT services, being under pressure, but these are backdated numbers. If the IT companies are coming out and posting good numbers and giving you good visibility of quarters ahead, could it mean that sequentially companies like Teamlease actually could start getting a favor? So it's a direct play on IT.
It is absolutely
and it could be seen in Q2, Q3, and this could be a troughing out quarter.
This as well as Info Edge, because of Naukri, both are always a direct kind of beneficiaries of the IT turnaround. But the problem is nobody is willing to call it out. They tried calling it out 2 quarters ago, 1 quarter ago, that it's bottomed out. From here on, at least things are going to look better. But that hasn't panned out. So that bottoming out process itself is taking a lot more time than anticipated, and that's why I think people are just biding their time before they are willing to make that bet that perhaps it's bottomed out and we're going to see hiring back again. Because yes, some of the IT companies are back at the campus, they are talking about fresh hiring, attrition has come off, at least the headcount declines have got arrested, but nobody is calling out that they're going to go all out and get back into the normal hiring phase. And I think that's why people are biding time, because they're not cheap also in any respect, right? Some of these stocks. So Info Edge, of course, gets that play of Zomato and other holdings that it has of PB Fintech, etc. as well. But Teamlease, of course, has been trying to diversify itself, get a lot more general staffing and other HR services also into the play, and that's the reason perhaps we are talking about there is going to be a bit of a recovery. But that question, Ramani, on margins, that's a big talking point in the market right now, because you as it is work on low margins, right? It's 1.5%, and right now you're sub 1. When do you anticipate yourself to go up to the 1.5% mark?
Yes.
So I was explaining earlier in EdTech business, specific to this quarter, we had an impact, a very high impact, because following UGC guidelines, now all universities have to align their framework to the new education policy. And because of that, many universities have delayed admissions by 1 to 2 months, and that has impacted our Q1 billing. However, we are not concerned about that because all of that billing will be happening in Q2 and Q3. And we are expecting a very steep increase in profitability of our EdTech business for this year compared to last year. So overall, on margins front, from Q2 onwards, we are expecting upwards of 20% growth on a quarter-on-quarter basis. This coming from staffing segment because of the fact that NEEM impact is fully absorbed, and the EdTech business having higher contribution on the university billing this year, given the pipeline of student signups and university signups that we have. So we are confident both on profit, absolute profits, as well as margin expansion consistently Q2 onwards.
Which means by Q3, Q4, probably it's a very good high probability that you can go back to towards 1.5. Is that a fair estimate?
Putting down into percentage terms is a little difficult given the fact that staffing is a pass-through business with the associate salaries. So depending on at what salary levels and in which industries we are hiring the associates can impact the margin percentages. But on absolute profits, we are confident that we can expand 20% quarter on quarter for the rest of the 3 quarters in the year.
Any uptick that you have seen in the apprenticeship or internship, etc.? Because there was a lot spoken in this budget when it comes to employment. Any change in the behavior from corporates in the last 1 month, and any comment if you have on on that proposal coming in from Karnataka?
Yeah, I mean, firstly, it's a welcoming enabler for our own objective of putting India to work, because there is a lot of focus that has now come on employability and employment, for which 2 of our largest businesses cater to, staffing and apprenticeship business. So, I mean, we still have to wait for the finer details and notifications on how the schemes get implemented. But more importantly, this highlights the fact that the government is focusing more on formalization of employment and also generation of new employment, which can be directly beneficial to our business. And with apprenticeship getting more sanctity and more coverage, both in terms of apprenticeship as well as internship, can add a fair bit of market expansion for our degree apprenticeship business. But again, to get into how exactly it would impact and what kind of percentage growth that we can expect, we need to see the notifications and other finer details.
Okay, Ramani, on that note, we let you go. Thanks so much for joining us. Time